Welcome back to the channel. Today, we're diving deep into a fascinating microcap stock that has popped up on our hard-to-borrow screener, NCRA Inc., trading under the ticker NCRA. We're going to dissect what makes this stock so unique, why its cost to borrow is skyrocketing, and what that could mean for potential short squeeze dynamics. This is a real-world example of how these market forces play out. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's talk about NCRA Inc. This company operates in the consumer defensive/packaged food sector, focusing on land-based recirculating aquaculture systems, fish farming, and the production of aquatic and food products. It's an acquisition-focused company, which adds another layer of complexity. With a tiny market cap of just $2.03 million, NCRA is firmly in microcap territory. Looking at recent price action, it's been a tough ride. NCRA is down 1.36% today, a significant 20.77% over the last 5 days, and a staggering 76.19% in the past 30 days. Short chart, NCRA 30-day price chart with recent declines highlighted. What is cost to borrow and why it matters? So, what exactly is cost to borrow, or CTB? Simply put, it's the annualized fee that short sellers must pay to borrow shares before they can sell them. Think of it like paying interest on a loan, but the loan is shares of a stock. When a stock is hard to borrow, this fee can skyrocket. Why does it matter? A high cost to borrow signifies intense demand from short sellers and or a critically limited supply of shares available to lend out. This daily fee constantly eats into a short seller's potential profits, and it can create immense pressure on them if the stock price starts to move against their position. These fees can even exceed 100% annually because they are calculated daily and compound over time. Why this stock is hard to borrow right now? Now, let's look at NCRA specific numbers that make it stand out. The annualized cost to borrow for NCRA Inc. is an astronomical 1095.9%. Highlight number on screen. That's an incredibly high number, signaling extreme demand from shorts or very limited supply from lenders. What's more, the CTB momentum for NCRA has surged by an astounding 934 percentage points over the last 5 trading days. This rapid increase shows that the squeeze on borrowable shares, or the conviction of short sellers, is intensifying quickly. Currently, there are only around 70,000 shares of NCRA available to borrow. When you consider the estimated float for NCRA is a mere 0.5 million shares, you can see how tight the supply truly is. Our internal composite squeeze score, which combines these factors, currently sits at a high 86.1 for NCRA. Squeeze mechanics explained. For those new to this, a short squeeze occurs when a stock's price starts to rise, putting pressure on short sellers who borrowed shares and sold them, hoping to buy them back cheaper later. With a high cost to borrow like NCRA's, those daily fees are eating into their capital. If the stock price increases, short sellers face both rising paper losses and escalating fees. To limit their losses, they are forced to cover their short positions by buying back shares. In a situation like NCRA, with only 70,000 shares available and a small 0.5 million share float, any significant buying pressure can make it incredibly difficult for short sellers to cover without bidding the price up even higher. This cascade of forced buying is what creates a short squeeze. However, it's crucial to understand that a high cost to borrow does not guarantee a squeeze. It can also indicate that short sellers have very strong conviction and are willing to pay a premium to maintain their short positions. Dilution risk check. A critical factor for any short squeeze thesis is dilution risk. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This can provide liquidity for short sellers to cover and often dampens or negates any potential price appreciation from a squeeze. For NCRA, our check shows good news on this front. We haven't found any recent dilutive SEC filings like SMINUS1, SMINUS3, or 424B within the last 90 days. So, for now, NCRA appears clean on the dilution front. Recent reverse split watch. There's another significant factor for NCRA Inc. It executed a 1/4-30 reverse stock split just 7 days ago, on 20/26/7/7. A reverse split reduces the number of outstanding shares and, by extension, typically reduces the float, while proportionally increasing the share price. Historically, many microcap stocks that undergo reverse splits tend to see renewed volatility or even a price pop within about a month after the split. This isn't a guaranteed outcome, but it's an observed tendency in some microcap names as the market digests the new share structure and resets expectations. This could add another dynamic to NCRA's current hard-to-borrow situation. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. So, what should you watch for with NCRA? Keep a close eye on the cost to borrow rates and the number of shares available to borrow. Any further decreases in available shares or increases in CTB would amplify the pressure. Also, monitor the daily trading volume. Today's volume for NCRA was 155,000 shares, which is significantly lower than its 30-day average volume of 1,275,593 shares. The relative volume today was only 0.1x average. This very low volume means relatively few shares are changing hands, making it potentially harder for short sellers to cover their positions if significant buying pressure were to emerge. Given the stock's recent price declines and the reverse split, any sustained buying interest could spark significant volatility in the coming weeks. NCRA Inc. NCRA presents a classic hard-to-borrow scenario with its incredibly high cost to borrow, rapidly decreasing share supply, and tiny float. When combined with the recent reverse stock split and the absence of recent dilution, it creates a unique setup worth monitoring closely for anyone interested in short squeeze dynamics. Remember, this is an educational exploration of market mechanics, not a recommendation. Always conduct your own thorough due diligence. If you found this breakdown of NCRA helpful, please hit the like button, subscribe to the channel for more deep dives into hard-to-borrow stocks, and let us know in the comments what stocks you'd like us to analyze next.